Canadian inflation may be in trouble already before the trade war starts. Hi, Yinan here. So February inflation data in Canada is 2.6%. We all saw this number, but I wanted to make a video to discuss a bit deeper into this number because I feel like it actually comes with more of a forecast for future risks that people are not talking about enough, right? And as Canadian real estate owners, I feel like we are already in a slow market and everybody is looking for a better future, looking for a better market. However, this data point, I feel like it could bring more risks that people really need to be prepared for or at least be aware of, right? I hope I'm wrong. Like this is, my guess, right? Like, but just based on what I see. But I wanted to share my thoughts and my guess with you, just in case that it can help you to better understand this part of the risk in the economy. So let's take a look at the screen. So this chart, right? Basically, this is the inflation in Canada and the US. And on the left, we see that February 2.6% is above the market expectation of 2.2% of inflation. And that number is right here, 2.6. And you can see this 2.6% is a lot higher than January, December, November, October, like a long time ago, right? It's basically went back to the last year, July point at 2.5%. And the last half a year has all been lower. And what's more concerning is the CPI increase to 163 in February. You can see this jump from 160, a little over 160 to 163, right? This jump is already about 1%, even just month over month. Keep in mind, the 2% target Bank of Canada has set for inflation is an annual number. So we're supposed to increase by 2% in 12 months, okay? Over time, in 12 months, increase by 2%. And now in February, we just from 1 month, we already jumped like half of what we're supposed to gain in the whole year, right? This 1 month already took half of our target for the entire year. So that is concerning to me because when the actual price of goods change, it's no longer just a year over year, like a base year effect. It actually is increasing of prices. And the main reason for this jump, a lot of it is the HST break that we had during the Christmas holiday, right? Remember, there's no HST on a lot of goods and services during the holiday season up until February 15th, okay? So this number that we just saw, the 2.6% year over year, or this 163 consumer price index jump, both of these jump basically incorporated half of a February that has HST added to it, right? So basically the other half does not have HST. And the previous numbers, you see December, January, they all looked pretty good because there's no HST on those numbers, right? So basically February is the first month that half the month's HST is added back and half the month is not. So comparing to last year, right, we're still benefiting from half a month of HST break. So in March, we're not going to have this half month's HST break anymore. So year over year, we're going to see even worse because HST break is gone. Had February not have the HST break, these two numbers would have been even higher, right? Maybe even pushed to like, 2.8 or maybe over 3%. So that gave us some worry that, hey, is inflation becoming problematic again? And this is even before the trade war started. We all know, once the trade war starts, more tariffs are added back and forth. It's going to make this number bad, right? But now, even before that, we're already starting to see a sign of trouble. We all heard from the Bank of Canada to say that if the inflation goes up, then Bank of Canada will have no choice but to use interest rate hikes or similar mechanisms to bring down the inflation. And if the economy is bad, supposedly we should drop interest rate, right? Because we just dropped one in March and everybody was excited about it. And however, this drop, that 0.25% drop was widely criticized because a lot of people think it's not the right move to drop interest rate when our inflation is, seeing sign of trouble. And even our Bank of Canada Governor Tiff said, we're starting to see that inflation is picking back up again, and the Bank of Canada will need to watch very closely, and will need to watch for the balance between inflation and the need to stimulate the economy. And they're opposite forces, right? One needs to increase interest rate, the other needs to drop interest rate. And Bank of Canada will choose to increase as a higher priority than dropping interest rate, because Bank of Canada's mandate is to keep inflation down. They do not need to be accountable for economic recovery, right? They just need to keep inflation down. So what that shows us is that, hey, from the current February 2.6% and the jump in CPI, we can already forecast March is not going to look any better, right? March is likely going to look worse. And that's going to have a new direction on inflation expectation, which will make, as you remember, in 2023, 2024, when we had increased inflation expectation, the market went south, right? The market tanked and everybody was very nervous. So now I feel like we've had half a year of very good inflation numbers, but we're starting to see some trouble, right? So I just want to make sure, I hope I'm wrong, right? I really hope I'm wrong that this is not going to become much worse, and we can just keep dropping rates as expected. Our tariff war is gone. Maybe it won't materialize, and we just keep dropping rates and we recover our economy, recover our housing market. Everybody's happy, right? I hope that happens. But right now, looking at this, it gives me signs of worry, and I can see some risks, right? And on the US side, February is below market expectation at 2.8%, below market expectation of 2.9. At least in the US, it's not going higher, right? And however, in the US, the CPI did come up higher too. So, and that's just because base year effects. You can see last year, February was pretty high in the US. So that even though the CPI went up, but the year over year went down, right? So, I mean, it's a different market, different dynamic. But Canada, I do see having more risks than the US side does. And if we dig deeper into the inflation components, we can see that the biggest component is shelter, right? Which, I mean, it's not surprising. You can see out of all the factors, right? Shelter, like housing rent or price we pay on interest on our mortgages, these are also causing majority of the inflation, which it's not news anymore. It's been going on like this for a while, which still gives me some hope that, hey, you know what, maybe if our rent drops a bit, which we already saw in the data, that can help with the inflation pressure. If we look at the core inflation, it's even worse. Core inflation, which is an important figure that Bank of Canada look at when making these decisions, right? Core inflation is the highest in 15 months, okay, at 2.7%. And if we look at CPI median and CPI trim, they're even higher. They're at 2.9%, right? So there's different measures of core inflation, but they're all pretty high right now. Does not look very good, okay? And you can see the US side doesn't have as much of a jump. It's more sort of smooth line, which is good, right? We want to see a smooth line, year over year, 2%. Great, like that's the ideal way, but Canada seems to have some jumps. So just wanted to quickly share with you some data points. And I also saw a few more interesting data points, which I found a little concerning, right? Just from a real estate perspective, just wanted to share with you as well. First is that Canadians left in the highest volume since 1967, right? So this basically shows the number of people, how we have immigrants, but then we also have emigrants, right? People who migrate out of Canada, right? And that number of people, and I mean, we have consistently high volume of immigrants, but number of emigrants has been going up ever since the pandemic started, especially the last 3 years. It's been quite high. This number we have not seen since 1967, right? Which combined with the other data point we saw the other day where Canadians are unhappy, right? Canadians are least happy, especially new immigrants, young people are least happy amongst all the people because of many reasons. It makes sense, right? People are leaving Canada at an unprecedented rate. And this is showing another interesting point mentioned by Better Dwelling is that this number is understated, right? Severely underestimated, because These numbers are dependent on people notifying the government. Hey, I'm leaving, bye. If you don't notify the government that you're moving back to China, for example, and the government will just assume you went on vacation, you will come back, right? So it does not subtract you from our population. So this number is understated. The real number is more because there's a lot of people who just left, didn't notify the country, didn't notify the government, just left and not coming back. That's not in here. And also, it overestimate our population growth, right? Because you know how we have been saying that we have population growing very fast, and because we don't track people who on vacation but never coming back, our true population is actually overestimated, right? So that's another point to note. So right now, when people are leaving at a high rate, and we have weaker, slower immigration as a part of our new policy. So right now in Canada, as of Q1 2025, we have a very high percentage of population that are non-permanent residents, right? We have probably the historically high. So 1 in 14, over 1 in 14 people in Canada are non-permanent residents, okay? People who are here on visas, temporary visitors, and that's showing that, I guess, for a real estate purpose, right? We know that these non-permanent residents cannot buy real estate, right? They can only rent, which explains why for condos, for example, right? We saw the data where renters keep going up, but buyers keep going down over the years, right? That also explains. So not a great news for real estate market, especially with all these new condo completions coming up. And the latest data shows that our country has 41.53 million population on January 1st, and it's rising just 0.2% in Q1 2025, right? So the last quarter, we only had a 0.2% increase. So our quarterly growth has been less than a fifth of the peak in Q3 2023, and the lowest since Q4 2020, right? So right now, our population growth has really slowed down. And remember this, Canadians leaving the country number is underestimated, right? So people are, actually leaving more. So this is probably also our population growth is, even though it's already the lowest, it's probably still overestimated, right? So our population growth is not doing the best right now. And when we have record number of new condos completing, we need all these new people to come and buy them or rent them, right? So slow down population, it's not going to be good for the market. Just another risk factor I wanted to mention. And this is the interesting chart I saw on Reddit. Canada's lost decade, right? To say, hey, the last 10 years, what happened, right? Our real GDP per capita grew only by 1.4% from 2015 to 2024. Okay, so past 10 years, our real GDP per capita, people's wages and income are the same as 10 years ago, right? And if you compare US, right, USA, it grew over 10 years by 18%. So people are like, on average, like each person on average is 18% better, right? Over 10 years, which is not asking for a lot. 18% better over 10 years means every year you're about, let's say, roughly 1.8% better. So makes sense, right? Every year you're about 2% better, your wage goes up 2%, makes sense. I mean, we've had so much more population coming in, and our GDP is growing, but not growing as fast as population is growing. So, which causing higher unemployment rates, right? So, and that causes our GDP per capita, it's actually a lot worse off than other countries. Comparing against many other countries, we're like one of the lowest, right? On a per capita basis. And no wonder people are not happy in Canada, right? People don't feel the happiness, right? So that also contributes to it. Okay, so as I see them, I just wanted to share with you to discuss what's going on in the market, and everybody's watching the real estate market, hoping it to get better. But sometimes we got to look at the bigger picture, right? Like what's the macroeconomics doing that can translate to a better real estate market. So hope you like it. If you like this content, please like, subscribe, and until next time, ciao.